Alright guys, what's going on? This is Ryan aka Canner and Clark, and I want to do a brief Bitcoin market update. I want to talk about how I arrived to that value yesterday on Twitter of 86.50, where I got that line in the sand from. Likely many of you are already familiar with volume profile charts, in which we discuss the amount of volume that was transacted by price, not by time. And I arrived to that value yesterday through a combination of volume profile charts and TPO charts, which are similar but not exactly the same. So we have not got into these in depth yet, but we will cover them. So before I get into any of that, I want to talk about this tweet that I posted the other day. I said, given I would say cryptocurrencies like Bitcoin are, in my opinion, disruptive tech, what does everyone think of CBD? I think there are plenty of parallels between the MJ boom and crypto, but is CBD disruptive? So I do think that there are parallels between these two markets. I think that they are both pushing edge in a way. They are testing what are our traditional norms, and I think that they are both received in the same fashion as is anything new and disruptive in the beginning. But I have another question too, and I want to post this question to you guys. I would like your feedback. Anyone who leaves a comment, leave some constructive feedback. That will be entered into our $100 weekly Bitcoin drawing. And in the same way that crypto is disruptive, okay, and let's say that we consider that Bitcoin is a disruptor, what happens if there's something that is going to arrive to crypto within the next year and a half that will disrupt what we currently hold in high regard as our premier cryptocurrencies? And with this in mind, if CBD is disruptive, what would you think of something that would be a disruptor to a disruptor? Okay, so a little bit of a mouthful, but this is how we have to constantly think of anything that's new. All right, any time that something new comes out, there is constantly iteration upon iteration upon iteration. It's never just a matter of arriving and suddenly, taking your seat at the throne. So pose this question to yourself. Okay, think about it, leave a comment, and again, you'll be added to our weekly drawing. Anyone who leaves a comment with regards to this question will be added to the drawing and will win $100 in Bitcoin. We do this every single week. So let's get into the market update. So currently, all right, we're starting off this week decently, right? So Monday is starting off well. Okay, we pretty much reversed the entire week prior. So the week of January 20th. All right, January 20th, you could see that what I have right now, and this is going to tie into what I'm getting at with regards to that 86.50 number. So what I have right now is each of these weeks has a volume profile attached to it. So I have a 4-hour chart on right now, but I have the volume profile for the completed week. All right. So this is showing me where most of the volume was transacted. Okay. So this is good because there are times when price could spend a good amount of time in an area. All right. Which a TPO chart will pull up on. So this is a TPO chart. Okay. And what this shows us is time price opportunities. So it shows us where we spent the most amount of time. Okay. Now, this is useful in traditional markets. So when I was trading equities, this was useful because in the beginning of a market open, or even at a market close, there will be volume aberrations. So market open, sometimes there'll be an explosion, a rush. There'll be a ton of volume. And if you're looking at an individual volume profile for a day and trading on behalf of that, if you're an intraday trader, that's going to throw off your profile. Okay. And the profile is going to represent the underlying data. It's going to be a distribution of that. So any type of anomaly in the beginning is going to drastically throw off how you might perceive that data. All right. So this is where TPO charts come in handy. Okay. Because they show us where we spend a majority of time, not necessarily where the market spent, or rather where the most volume was transacted. Okay. So the truth is we want both of these charts to confirm each other. We want to confirm that as price is moving through time, that volume is moving with it as well. Now, Bitcoin is a 24-hour market, so I think that it's important to place precedent on where a majority of the volume took place. Okay, so we will see that there are times when the market will move sideways, and I mentioned this to BlockRoots members. We talk about using charts that are they're derived from data, not from time, so different periodicities, meaning this is a time-based periodicity. The candle is derived through time. Each one of these is a 4-hour rotation. So 4 hours passes, even if there's no volume or nothing that takes place, a candle is going to be printed. So now you can imagine that there are plenty of times when there's a lot of redundancy and there are a lot of candles printed, but maybe they don't really necessarily mean anything. Okay, maybe they are going to be building market structure, something that we take seriously when we're looking at support and resistance, and they're really going to just be arbitrarily printed, and for that matter, they're not going to be actionable. So there are times when you could actually use charts such as tick charts, trend reversal charts, range charts, Renko charts, point figure charts. And these are going to be charts that they're essentially going to be constructed by something other than time. So a candle will be printed if a certain amount of volume has been transacted. Okay, a candle will be printed if we have moved a certain amount within a range or if we've exceeded a previous bar, right? So I look at TPO charts and volume profile charts. All right, I want to make sure that we are in an area where there's a lot of volume transacted if we are looking at as being a potential support and resistance, because a lot of the times that is one of the footprints that larger participants are going to leave. Okay, they cannot get in all at once in one area, so they'll get in over time. So when you're looking at a profile of price through time, the high volume nodes are a good indication of where maybe those larger players were interacting. Okay, and you'll see that you move through high volume nodes and low volume nodes differently. So we cover all this in BlockRoots. I don't want to beat that drum too long, but on Twitter yesterday I mentioned that 86.50 was an important area for me. Okay, that was because that was the point of control for the previous week. All right, we had this grind up the past week, all right, the week prior, all right, to the one we just closed out. We had this grind up into higher time frame resistance. Okay, and you can see that right here. That coincides with the support of this structure, the value area low of this structure, which was our first test of the underside of the 89-day or 91-day range that we were spending most of our time in after this major bullish move off of the lows. Okay, so first test of the underside of this structure, you imagine that the first test is going to carry the highest probability of showing some type of immediate response, okay, in terms of magnitude. So we grinded up to that and then impulsed into it, spent a brief amount of time there before being rejected. And the volume profile for this week printed something that looks similar to a pretty even distribution. So this is pretty much a balanced distribution with the exception of our test upward. So you'll see that within a range, when you're moving in a range like this, let's say, okay, that the volume profile will represent a balanced range in the same way that let's just say a profile that will show standard deviations, okay, and norms, okay, balanced distribution will look balanced as well in that regard. So what we notice is that this line right here, okay, is where the most amount of volume was transacted. Okay, so that is called the point of control. All right, and this is going to act as a support and resistance, and on the higher time frame it carries more weight. So we're looking at a weekly rotation in this case. So the first area that we come back down to, all right, which is not only the point of control, but the high of the previous structure. So you have this confluence, and we're always looking for confluence in evidence, right? To substantiate a case for something acting as support or resistance, the more higher time frame confluence we have, the more of a case that we have. And that's all we're trying to do. We're trying to build an edge around something that puts probability in our favor. So anything that is strong is going to obviously increase those odds. And all we're trying to do is make a 50-50 coin flip be a 51-49 coin flip. Okay, just to give you an idea of the edge that we mentioned. So we're trying to put that in our favor. All right. Now, the week that we had before we just opened, okay, the point of control was the same as the prior week. So you could see this whole area right here. We maintain this area as the area where most of the volume was transacted. All right. You can see that we held this as support. We lost it temporarily, came in to test this high structural support. It looked like we were putting in a bullish pattern and that we were above it again. It looked like we were turning the top side of this to support, but we broke down. And this is a bad sign, right? Because when you lose support, you're back above it. This is not acting as support again. If you lose this again, as I mentioned on Twitter, there are a few things mechanically that take place within this movement alone. Okay, so anyone who is stopped out of a short, okay, that has, let's say they have a short right here, okay, this bullish move up stops out their position. So bam, they're stopped out right here. If their target was lower and they had an OCO order to take profit, that is removed as well. So any short is a buyer essentially. Okay, so if you're in a short position, you are a future buyer, right? So if you had an OCO order to buy down here, based on your short still being open, if you're short scalping, for example, any of that firepower that would have acted as strengthen the bid in this case, all right, whether it was a market order or a triggered order in the form of a limit. So any buying pressure is taken off the book at that point, whether it would have been on the book, okay, as passive order, limit order, or it would have been aggressive order flow or active order flow in the form of a market order. But either way, if a short is stopped out, there's no more buyer, okay? That person is taken off. There's one less future buyer at support. So just think about it that way, okay? We have one less buyer to step in at the lows, all right? So you approach a low again. At that point, confidence is a bit diminished, all right? You lose the low, all right? In the first area, we come back down and test again. You can see that I have structure indicated differently based on different lines. So I'll have my clusters indicated by these dotted blue lines. So cluster high, okay, cluster high that we're looking at back here, all right, the top side of this range, because remember, we have to look at range as an entire structure. It's an area of market structure. When it is within this area, okay, these are market norms. So basically in the center of the range, the value area, we could say that's more or less fair value as buyers and sellers kind of auction this back and forth. When we're outside of this range and we're approaching it from either direction in the future, this is going to act as a significant support or resistance, right, depending on what direction we are approaching it from. Especially with crypto, because we don't have any fundamentals to go off of in crypto. We only have technicals. So a purely technically driven market will be driven more by the sentiment of its participants and their willingness to act on these areas, all right, that we are all paying attention to. So we're all looking at a certain area. It is going to have a higher probability likelihood of manifesting whatever level of importance it is deemed to have, okay? So 8650 lined up between the points of control, okay, on a TPO chart, which again, this is on the daily, but if we look at this on a weekly, all right, this is the TPO, you'll see that these lined up, okay? So currently, this is the week that we are currently opened within value of the previous week, but you can see these red lines indicate where we spent the most amount of time. So not only do we spend the most amount of time, this is where the most volume was transacted, okay, from a high volume node standpoint. So that white line right there. I don't want to confuse you by looking at the Sierra Charts platform, but they are roughly similar, okay? So now, technically speaking, this should act as some type of support. And you can see the price is a little extended right now. It is more or less grinding up. And grinding up towards resistance or approaching a resistance close by is different than grinding up in more or less air. Okay, so this is a gap right here. Not much volume is transacted. If we were going to be looking at a footprint chart, we would see that not much occurred right there. So grinding up into this area, I expect that we have some type of pullback, and I would like to see, and this goes along with my Twitter post, I would like to see that we come back down and retest this area as support. Okay, this area, this TPO, this volume profile. All right, so come back down to this area. Anywhere within this area, okay, honestly, at 8650, okay, even down to this previous microstructure break that we had. Okay, this temporary support, turn resistance, now we're flipping. All right, anywhere within this area to me is fair game. I would expect a pullback. I wouldn't want to buy right here, all right? Now, there are times when, you know, a trader's job is to identify when price and value become detached, and they often do in a really reflexive asset. And you can see that often, if anything, the most reflective assets are going to be doing that. So Bitcoin has had this nice move up. It's not really showing ridiculous impulsiveness, all right? So I do anticipate a slight pullback, but in my opinion, dips are still for buying, all right? Can we come down here in the future and still be entirely bullish? Absolutely, okay? Absolutely. Why? Because this is the previous range that we were stuck within, auctioning within this for 40-something days. This is the first area that we retest, okay? We impulse out of this, and we could be very well establishing a new balanced area, a higher time frame range, and this is what markets do. They impulse from one range to the next. Markets move sideways about 80% of the time, okay? Don't quote me on that figure. It might be 70% of the time. But markets range for a long period of time. They impulse violently. People miss out on the trend. They end up, one of the things that causes momentum is a lack of responsiveness to initial movement. So there is a delay, okay? And then market is extended from value. You get those last buyers in, pushing the trend up a little bit. It's exhausted. It ends up correcting, right? So I expect some type of pullback here, but in my opinion, we're going up to test this area, all right? You have to think of first things first from a market structure standpoint. 9,200 seems like an area that we will be testing, all right? So I have to consider that we need, or rather we should consider that there is a default approach, but we should have a default approach of if then within the market. All right. You don't want to create an if then that is too high time frame based to where you miss out on the bulk of the move. But my if thens right now are based on microstructure. So microstructure to me means series of higher highs and higher lows, okay, and not violating previous market structure. So right now we are still within what I consider to be a bullish structure on the daily time frame, in that we put in a high outside of this range. Continuation is never going to be clean. It's always going to be messy. We could range for a really long time up here. All right. And it wouldn't change anything for me because this market structure is still intact. All right. So try to adapt that within your own system. In a technically driven market, these patterns are not only for paying attention to with regards to flags and triangles and all of that, which can be painted by anyone who is a higher frequency, large enough, or rather high enough, or rather capitalized enough. But the things that I'm paying attention to are advances within market structure. And these areas are, as long as the integrity of them is still maintained, I see no reason in flipping bearish, okay? Even so, if we come down to test the bottom of this range, I don't see a reason either way, because you can see that often Bitcoin spends a good amount of time liquidating both sides of the market, getting both sides of the market crowded at extremes, and then inflicting the most amount of pain. It's a peer-to-peer exchange. It's a future, so there's pain to the upside. There's fear moves markets with futures and commodities to the upside and to the downside. So in equities, there is downside skew. So if you look at option skew, you'd see that puts have higher implied volatility because everyone's always waiting for that crash since 1987, I believe. But with futures, because you are taking the other side of someone else's long, fear moves markets up as well, because fear to a short is buying. Okay, they close out their position by buying. So not to get too into that, this is all stuff that we go over within BlockRoots. Two other things to mention, okay, and these are things that I'm not sure that are pointed out, but looking on the daily time frame, all right, one thing that we are going to need to contend with, again, this is an important area because we all deem it to be important. It's an important area within traditional markets as well with relation to the intermediate term trend. This is a 200-day moving average. Again, this is a lagging derivative of price, so it's going to flatten out as price moves sideways because, again, it's just a derivative of price movement. So if price moves sideways long enough, the averages are all going to flatten out. So this is an area that we were first rejected by. It's not necessarily that we were rejected by this any more than we were rejected by basic market structure, right? So if enough people are acting on this, though, it's going to end up manifesting importance based on that. Okay, if you see this and you're going to sell this, well, then you adding up enough in a cumulative effort of many other people is going to create that resistance. Okay, so we have to contend with the 200-day moving average. I think that price is going to likely spend a little bit of time moving, again, excuse my artwork, moving within some type of range. Okay, maybe creating that meme of an inverse head and shoulders. Wouldn't that drive everyone nuts? Because patterns are memes. Okay. And that's because everyone talks about the pattern until it's confirmed. A head and shoulders pattern, just like every other pattern, is only confirmed in hindsight. Okay. And by that point, there's edge in recognizing strength on the way up. And of course, there is comfort in getting in after confirmation. So you really have to choose the type of risk that you're willing to bear. But the thing I want to point out, all right, and this is something that is noteworthy, although we do have a limited sample size. So we have a limited sample size, and I'll take us to the Bitstamp chart with the most price history. Looking back all the way till inception, put on a line chart so there is less noise. Since inception, the first month of the year, January, everyone's on the same page. Since 2012, the first month of the year, not to scare everybody, has either put in the high of the year or the low of the year. Now, I think Bitcoin is an asset that is growing logarithmically. All right, that means that I look at it and give this chart weight. Okay, it is an extremely new asset. Just like everything else in the beginning, it is denied. It is, not acknowledged until it is expensive enough to where the masses are willing to jump in. And we all know that that's the time that we want to be selling, right? So we want to be able to identify value before everyone else can. And that means that you need to take risks, okay? Risk does not equal reward, all right? It doesn't mean that if you take more risk, you are going to absolutely be rewarded. But that is the type of weighting that you will give to your decision-making process in that you are willing to take more risk for more reward, okay, than the common return of something that is, again, maybe a low beta asset. So we need to be compensated more, and we're willing to bear the risk. Bitcoin has a better Sharpe ratio than anything else. It is still really early. It's been the best performing asset of the last 5 years. Okay, it's the best performing asset of this year, I believe now, with exception to Tesla. So looking at this chart, Bitcoin has been putting in either the high of the year or the low of the year since inception. Now, we know the halving is 4 months away. And every time there has been a halving, Bitcoin has went on to put in a massive bull run beyond all comprehension. Okay, we're talking thousands of percent. All right, insane returns, and the halving has a fundamental. It is the one fundamental thing that we could actually say is worth noting because it has an effect on the amount of Bitcoin that is put into circulation. Okay, well, this is more along the lines of something that affects miners, but the reward for miners is halved. Okay, so this ties right into scarcity, ties right into supply and demand. Okay, now the one thing about supply and demand though is that even if you cut supply, it doesn't necessarily mean that demand is going to increase. So we need that demand, but even if we have linear demand in something that has a supply that is decreasing, linear demand alone, meaning demand that is just increasing linearly over time, we will see a tremendous appreciation in Bitcoin prices, okay, over time. But then that brings into mind the time value of money, and is 20% a year good when there are other things that might give 20% a year? Not necessarily, but is 100% a year? Is 2,000% a year? Yes, okay. What I mean by that before I finish this is, if Bitcoin goes on to return if Bitcoin is $100,000 in 15 years from now, okay, and that's just, I'm pulling that right off, I'm just making that up. If Bitcoin is $100,000 15 years from now, that is a big difference than if Bitcoin is $100,000 5 years from now, okay, because of the time value of money. There are other things that we can not tie our money up in that would potentially yield more returns, okay, in the near term. All right, maybe they would mean incurring more risk, but as traders and as investors, all right, that's something that you need to keep in mind, the time value of money, okay? Tying your money up for a guaranteed return over a longer time span, or taking a little bit more risk, all right, for something else in the short term. So that's that, guys, okay? Again, I would love feedback on that tweet that I put out the other day. Leave a comment in regards to it. We're going to be rewarding someone who leaves a comment with $100 in Bitcoin. We do this every single week. All right, guys, as always, it's been a pleasure. This is Ryan with BlockRoots. Exercise proper risk management and trade effectively.